Good morning, traders. This is Monday. Okay, let's start our this week webinar. Now let's start with the dollar index DXY. Right, you can see that right now I show you the chart, which is the 6-month time frame chart. So it means that every candle represents 6 months of trading activities. All right, let me take the pen first. Right. So every candle represents 6 months of trading activities. So you can see that price for dollar is continue to be moving upwards, right? Right now, all the major currency beside dollar, beside pound, beside dollar, pound is the one that signal they're going to increase the rate. It's going to come sooner or later, all right? So these are the two currencies right now is very strong, and because of the rate, because of the central bank of each country actually came in. Right, coming to the market and signal that they're going to increase the interest rate soon, right? So we know that once any central bank come in to announce that they plan to increase the interest rate, it means their economy is doing well. That's why they want to increase the interest rate, right? And that's where we see that their currency start to get strengthened, right? So in view of this, we therefore want to look for opportunity to long the dollar, right, and also long the pound, right, long the dollar and pound against other weaker currency. Especially right now, the weaker currency are all the commodity currency, right? Of course, the commodity currency we are talking about is a 3 currency, namely the New Zealand, the Australia, and the Canada, right? And New Zealand is affected by the milk product, right? Their price is dropping, and Canada is affected by the oil. Oil price is last week I think they float around the $50 level, and with the Iran and the American have a deal on the nuclear agreement. Right, to stop Iran from going to nuclear, and it means that now Iran they have left their oil export. Right now, currently the oil market is already, the price is already so low, right, and have so much of supply. With Iran, new supply comes into the market. Iran has not been able to export their oil, right, under the ban. Now is lifted, and therefore we can expect more supply of oil coming into the market, saturated market, and therefore we expect price of oil to continue to go down, right, go below 50. Okay, so when we see the oil price start to go down, then there goes the Canadian dollar, right? So the pair that we have to watch is dollar CAD. Dollar CAD will be looking to buy, and of course for any currency that paired up with the Canada, right, we just look to sell on the CAD, right? It looks like CAD is going to be very, very weak. Their data, their economic data as well is not very good. It is very, very bad, right? And they also have cut rate as well, right? So we just look for our strategy right now is just look to short all the CAD, right? But of course, we do not just go in and anyhow short, anyhow sell at any level that we want, right? We sell at the level which is a technical level, right? Technical level. Now, what is technical level? It means that we are looking to sell at the supply, right? We don't just go in and sell in the middle of nowhere, right? No man's land. We don't do that. Okay, because when you do the no man's land, you have no idea where to put your stop loss. Okay, so now you can see that this dollar index, all right, has been rally up. So it looks like market is coming back to this level, right? This supply. Now, why this is a supply? Because there is a ERC, right? The base of ERC is this 50% candle. So this is actually a drop-based drop, right? This is actually a drop-based drop, right? So this is a supply that we're looking at right now. Of course, we can look at a higher time frame. You can see that if we look at the 12 months, means every candle represents 12 months of trading activities. 1 year, right? The supply is here. This is a very, very strong supply, which is here. 1 year supply, which is about 108. Price might go there. Who knows, right? It might go there as well. Current price is 98. 108. Okay, still far away. All right. So if you take a look at the 4 monthly, okay, the supply. So now you can see this dollar have already cleared this speed bump. Can you see that? Drop base drop, right? Previously we see the price actually went through, but it closed back below, right? This is no good, right? It means that the supply comes in. There's no conviction for the price to move forward, move upwards, sorry. But right now it looks like price is going to move through this level. There's no more unfilled order. There's no more unfilled sell order here, right? Why? Because previously the price is already breakthrough. Okay, so I would think that there's a good chance that we're going to see the price continue to rally up, right? That means that we're going to look for sell for more all the major currency, right? Look for sell opportunity for all the major currency that is trade against the dollar, right? Especially the euro, right? Euro still having a problem with the grid problem until now, although they have accept the new pack release package, but it looks like within grid the government still have a lot of problems to deal with their own people, right? So whether this future down the road you could have more problems from grid is still unknown, right? So this is still basically we can see that the euro is still very, very messy and still very weak, right? And we're gonna look to sell, right? But if you see some kind of intraday trade opportunity on the euro dollar, of course you can take the intraday trade, right? Intraday trade basically you can look for a buy if you have you see the multiple time frame, at least minimum 2 time frame in the sideways no directions, and the location is low. Like I saw that Elson have posted something on the forum. Then as long as we know that when you will look for a long, right, knowing that the euro is weak and the higher time frame is downtrend, you can always look for a long, provided you know that you try to get out within the same day or longer is the next day, because knowing that we won't know what kind of bad news is going to come out from eurozone again, right? So anytime you have a bad news, you can see that euro will just tank again. All right. Okay, so basically the general concept is the dollar is going to be continue to strengthen, moving upwards, right? So therefore we look to sell for all the major currency. Okay, that's the guideline. Yeah. Now let's start with our let's say start with the pound dollar, right? Pound dollar. Okay, start with pound dollar. Okay, pound dollar. This is only like last week. I am with all the SM. We have committed, every SM committed to one currency pair. We monitor one currency pair, and pound dollar is my baby to under my care, right? I've updated this last week, and last night I've also updated. I think there's not much change of what I've analyzed. Basically, I'm still looking for price to pull back to the demand, right? You can see that previously we can see that the price actually dropped into this weekly demand. Right, it dropped into the weekly demand, which I talked already last week, right? And it get rejected, and the price start to move away. So now the demand is in control, right? So I see that some of the members still confused about the demand supply in control. Now, when we see the price, let's say when we see the price start to move into this supply, this is not supply in control. Please don't make mistake of that. Don't make this mistake, right? When we see the price start to move up, it move up into the supply. Many people say that now the supply is in control. No, supply is not in control, right? So when the price move up, the supply is not in control, because they think that once the price arrive this supply, automatically is the supply in control. No, right? Supply is only control when we see the price get rejected away from this supply. That means that the price come into the supply and it get rejected away, the price move away. We can then say that, okay, now the supply is in control. Otherwise, it is not supply in control. The demand is still in control. All right. So right now the demand is in control on the weekly time frame. You can see the price drop on onto the weekly demand, and it rallied, right, 2 weeks ago, and 3 weeks ago, and we saw this candle went up. So now chances are I think likely we're going to see the price continue to move higher, right, higher at least until here, or even higher, because there's no more unfilled order here, right? So I will expect price to rally until here. Hopefully come to this supply, right? So the level that I'm going to long is, of course, I'm not going to buy at this level, because again, if I buy at this level, where I'm going to put my stop loss, right? I cannot just anyhow buy at the level. I must buy at the demand. I will always buy the demand and always sell at the supply. Okay, so this is a weekly time frame. So knowing that the direction is going up, right? So I'm looking to buy in the lower time frame, right? Because this weekly demand is 270 pips. I'm not going to take that kind of risk, right? In any case, this is already not fresh. Okay, so if I go to enter, I cannot enter on this. I have to use lower time frame with confirmation entry because it's not fresh. So now let's go to the daily. In the daily time frame, right? In the daily time frame, you can see that we see the price making a higher high. All right, and now I'm looking for price to pull back to this daily demand 93 and look for a long. All right, so can I look for a long here on the CP demand? Okay, I can, provided I have the 1:2, right? So let me see whether we have 1:2 or not. You see, if we're going to draw a calling, you see, when the candle body is so narrow, right? Usually what we do is we have to draw the line to encompass the top and bottom. That's how we draw, right, for CP when the candle body is very, very narrow. Okay, so that should be that is how we should draw this demand, CP demand. And you can see that it's very, very high. We just simply cannot trade this 139 CP demand, right? And there is no 1:2 at all, right? You can see that the high is here. All right. Okay, now since we cannot buy there, let's take a look at if we go down to H4, what can we find? Now, can we find anything there, right? In the H4, the daily, the CP demand is actually this one, right? You can see here. So chances are we have a very strong support here. This is support, right? You can see price actually hold here, and hold here, and hold here. Okay, so if price start to drop, right, it's likely to drop down to this area, right? We can look for a long opportunity here. Okay, that's the first long. Now by then, the trend line would have been removed, right? The trend line would have been removed. See that? By then, the trend line would have been removed. So that means that the price would have been drawn all the way here. So therefore, I cannot go long. The trend line has been removed, right? And let me see who is in control now. I need to see who is in control. Yeah, take a look. Okay, the demand is still in control, right? The demand is still controlled. So I'm allowed to buy the CP demand because the demand is still in control, right? But since the trend line has been removed, right? So therefore, I have to use a confirmation entry, right? So a confirmation entry, either I can, if this is a H4, right? I would go down to the H1. Right, it means that when the price finally dropped to this area, I'll go down to H1 and see where it react. Right, if it react higher, then it create a brand new demand, rally up and pull back again. So that would be my brand new demand. I will be long here at the brand new demand. Okay, with confirmation entry. Okay, so this is the level that I'm looking at. Now, should this level, let's say, what if I'm looking for confirmation entry and then price just drop and never give any confirmation entry at all? So what we're going to do? The next one will be this level, right? This level is actually the daily demand, right? If we go back to the daily demand, see, this is my preferred level, right? Because why is a preferred level? Because this is at the extreme low, right? So if the price drop to this level, usually price at the extreme is the lowest risk, highest reward. Why highest reward? Why lower risk? Because when the price drop down to this area, my long is here, my stop loss is here, and we are buying at a very, very low price, right? So it's called lower risk. Now, when the price buying very low price, when the price start to reverse back up, right, chances are this will be the target, first target we're looking at, right? Okay. So there are two areas here. The first area of demand is the CP demand, and since the price already make a higher high, right? But I can't buy at the D1 demand because I doesn't have the 1 to 2. So I have to go down to the H4 and wait for confirmation entry because the trend line would have been removed, right? And should there be no confirmation entry on H4 or H1, then I'll be looking for long at the demand 93, okay, which is a D1 demand within this weekly demand. Okay, so that is the pound dollar, right? It has not been, there's no change since last week. It's continued to remain the same setup. Okay, let's move on to the euro dollar. Euro dollar. Where's euro dollar? Okay, here. Okay, look at the euro dollar, right? Euro dollar, like I say again, has been weak. And if we take a look at the chart I posed, right, I think chances are we're going to see more weakness. Euro dollar is likely to go even lower, potentially go even lower. Okay, we should be looking to sell on the euro dollar. Right now on the weekly, there's no direction. Monday is down, weekly no direction. If you go back to the forum, you can see that Elson had posted the euro dollar, update the euro dollar, right? So the weekly is no directions, and he's looking to go long if the price drop down to the demand, right? I think drop down demand. So he's looking for intraday trade. Like I said again, even though the euro is weak, if you want to take a euro intraday trade to long and trade against the counter trend, right, it's up to you. But already know you should know that the dollar is so strong, euro is so weak, so your counter trend to go long, even for intraday trade, right, it is not that easy to make money. Okay, it's not easy to make money if intraday trade. The better odd will be waiting for price to rally up to the supply, right, to see whether you see any supply or not. If the current price is here, now what if the price start to rally back up? Is there any good supply for me to sell, right? So let's say, how about this one? Erase all this line. Okay. So now, is there any supply for us to sell, right? So the current price is here. We look for ERC. Now, ERC, this is the base drop, right? So we have a supply over here. Okay, that's a supply to sell. Is it right? Sometimes you find that, if you see that, oh, the chart is so small, sometimes it's very difficult to see the supply demand. So what you do is, once you do your analysis, look for supply demand, just try to zoom in, and you will see everything very, very clearly, much clearer than when the chart is very, very small. Right? So, has this removed any? Is this supply validated or not? Now, validation of supply demand is another problem. I think some students have a problem. Like this trip, I went up to Ho Chi Minh, and then we have a sessions, and then a lot of people still struggling whether the supply demand is validated or not. Now, the validations of the rule is say that the supply demand is validated when the trend line is removed. If the source that removed the trend line, it is validated. Now, a supply demand is validated when the opposing demand, supply demand is being removed, right? Opposing supply demand being removed. Okay, so that supply is validated. Supply demand is validated if it removes the swing low or swing high, or high. Okay, so these are the three conditions that we say that once you have either one of these conditions met, the supply demand is considered validated. And why we need to validate our supply demand is because we only trade supply demand which are validated, right? Simple as that. So you can see that this supply remove this low, right? This low. Now, what is the definition of a swing low? The definition of swing low is on the left we have two candle low higher than this low. On the right, sorry. And on the left we have also two candle low higher than this low, right? So we have something like this. This is a low, and on the left we have two candle low is higher. On the right we have another two candle. So this is considered the swing low, right? So this is a swing low. So when the price, this supply trade move beyond this swing low, we consider this validated, right? It's validated. But the problem is we do not have 1 to 2 to trade this supply. It is validated, but we can't trade this supply. Again, this is another rules that traders tend to confuse. He say, what about 1 to 2 and the validations, etc., etc. Now, the 1 to 2 meaning that now you can see that this is 123 pips. Now, from here to here, we definitely do not have 1 to 2. Don't have, maybe 1 to 1 only. So so therefore we are not allowed to trade this D1 supply. We cannot trade the D1 supply because it doesn't have the 1 to 2. But it is validated. Why is validated? Because it removed this swing low. Alright, so it's two different things, right? Two different things, so don't get mixed up. So since we cannot sell this D1 supply because we do not have 1 to 2, therefore we have to go down to the H4. When we go to H4, we try to locate a supply in H4 that is within the D1 supply that we look to sell, right? So you can see that this yellow line, can you see that? Wow, too many yellow line. Okay, this is our D1 supply, right? So now we are looking for a supply that within this D1 supply. So we are looking for a H4 supply that's within the D1 supply. So basically what I was saying is we are looking for supply somewhere here, this bunch of candle. Right? Easy right now, right? So forget about the rest. Forget about the rest. We are just looking for here only. Right? So if you still cannot look for a supply there, then what do? Zoom in your chart. You should be able to see the supply very easy. Right? Now, so to look for supply, we work from the current price, we look up. Now remember, we are looking for supply that is within this daily supply. Any supply is outside, we are not interested, right? So we are looking for supply here. Look at this, ERC. This is another ERC. Can you see that? Right? So we know that we are looking to sell if the price rally back up here. This area. Right? 34 pips. So we are looking to sell. Should we see the price right up here? We put the sell there. Okay? Now we have the level on level. Right? You can see that we have another level on level. That means that we have this as well. Okay? So for two ways we can trade this, right? There are 2 ways we can trade this. Level on level, so we are not sure which level the market is likely to react to, right? If we see the market start to move up, is it going to stop at the first level supply and start to go down? Or is it going to going up all the way and respect the second supply before it starts to go down? We don't know. This is something that we don't know. So what we can do is either we put our sell order on this L supply, the supply further away on the L1, right? Or we can put our sell limit on the L2 of the first supply and our stop loss above the L2 of the second supply. That's one way, right? Or the other way, we can take the whole thing as one single zone and we just wait for price to rally up and use a confirmation entry, right? Because by the time by the time the price has rallied back up all the way to that level, we will see this trend line remove, right? So trend line remove, we still have to use confirmation entry, right? So we just wait for price to rally up. So when we don't really have to bother whether at which point, at which supply the market is going to react. If the price is going to continue to go up and never stop, better still, we have no trade. But if the price is going to rally up to this point and it start to drop, then we have a brand new supply that is created right now. So this is our brand new supply, right? And we sell when the price comes back again. So our sell limit here, our stop loss will above this L2, all right? Above the L2. Now placing a stop loss is another technique, right? So now let's say that price rally up into this, and then we see the price start to drop. It creates a new supply. It drop. Oh, sorry. Like this. So we know that we're going to sell at this new supply. This is L2, right? So we are looking to sell when the price start to rally back up here again. So you sell on the L1. Now where are you going to put your stop loss, right? I suggest, right, you put between, give your stop loss a little bit bigger, right? So of course I say that in the workshop, I say that give about 20 pips, isn't it? When you deal with the major pair, right? So give yourself 30 pips, right, for euro dollar. If it's volatile, take a look at the ATR, right? If the average range has increased, then you have to increase to 30 to 40 pips. It's okay. So that means that you put your stop loss away from an L2, 30 to 40 pips, right? Why is this so? Yeah, because forex market tend to do this. They tend to do a stop hunting, meaning that if the price start to rally back up, even the price respect this supply, chances are sometimes the market like to slip through 10 pips to 15 pips, something like that, around there. Even sometimes it could be 20 pips, right? And before it do what? Before it start to come back down, right? So if you put your stop loss too close, you get stop out, but after that the price go your direction, right? And what a waste. Okay. So the downside about putting a bigger stop loss, 30 to 40 pips, depend on the ATR, is you still remain, when you have a bigger stop loss, doesn't mean that you are taking more risk. You still trade between 1 to 2% risk, right? 1 to 2% risk. The only difference is now you trade a smaller lot size. That's all. Now, so the question right now is, would you want to have many losing trade, and every trade you take is a bigger lot size, or would you want to a smaller lot size but more winning trade, right? So you make your own decisions. Okay. So for euro dollar, I know some of you might want to go long because of location trade, etc., etc., because you are in no directions. Okay, I see the LC is looking for price to drop here and do a confirmation entry. Yes, you can, right? But like I say again, generally the trend is still down, right? And euro is so weak. I'm just not comfortable to go against the trend, right? It is not so advisable. But if you want and you know your risk, you can go ahead and take it. All right. So that's the euro dollar. Let's move on to the next pair. Aussie dollar. Let's take a look at Aussie dollar. Aussie dollar is down. Monday, weekday is down. It's just down. Yeah, Aussie dollar is down, all the way down. Right? Now, you can see that it's down. Daily is down. Right? All time frame is down. 4 hourly is down. We just need to look for sell. Right? So 1 hour also down. Okay. So for swing trader, it's very easy. You just look for take your time frame. Daily, 4 hourly is down, right? So it's down. What to do? Look to sell. Very easy. This is a sell for D1. That's for intraday trade, right? For swing trader, your entry time frame is daily. Now, if we look at the daily time frame, where is a good supply? price is here. Look at all this. These are all bad supply, right? It doesn't create any big imbalance there, right? So for swing trader, our supply, our long supply is here, this one, ERC, very clear, very obvious. Okay, that means that for the price to rally all the way up here, it takes long time, right? We are talking about how many pips here? 200, close to 300 pips, right? It's going to take a long time. That means that for swing trader, you don't have opportunity for an Aussie dollar to short, right? But what you can do is you can go as an intraday trade, right? Swing trader basically have no trade, right? Then what we can do is look for intraday trade. Okay, you see this is the intraday trade, yeah? Daily is down, 4 hourly. Is there any good supply to look to sell? Right, so from the current price, this is the current price here, we just look up. Is there any ERC? I don't really like this kind of ERC. I want something that is very obvious. How about this one? Right here. Okay. So you put the horizontal line on this candle high. Now you look up. Right, there's a base. ERC. These are ERC, and the market goes straight into this. Right. So our supply on the H4 is this one. This is 50% candle. Right. So you can put your like this. That will be your supply. H4 supply to sell. 45 pips. Alright. Okay. So we are waiting for price to rally back up. You take a sell and down. Easy. Right? Easy. And whether you should use your confirmation entry or limit entry, you just need to draw your trend line, that's all. Right? It's not difficult. Just to draw your trend line and you know whether you should be using a confirmation or limit entry. Okay? Alright. See the copper, right? We take a look at copper. Copper, Australia tend to follow copper, right? The price of copper is being down. Commodity currency down, 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 down. Okay, let's take a look at the next pair, dollar CAD. Dollar CAD. Dollar CAD. Before I look at dollar CAD, let's take a look at the US dollar, the oil. Now, what happened to the oil? Right, it has been down, right? Weekly, monthly, daily. Right, so oil price has been down. Now it's $51. Last week, last week it go as low as 50.11. Can you see that? 50.1, the lower was 50.1. Right, with the Iran lift their export of oil, you can see the oil price is likely to continue to fall to the next demand, which is somewhere here. This one. Right, so we should be looking to long the dollar CAD, right? Long the dollar CAD. Let's look for dollar CAD. Dollar CAD, yeah, here. Okay, dollar CAD. This is a monthly time frame. We have cleared this obstacle. The next one to clear is this. Right, this is 1.306465. Once this clear, then we're going to see the markets coming here, right? And it is likely that we're going to see the market coming there, right? Because of all the reason I've just mentioned. And if you have not read the forum under the fundamental, please go there and read up, right? So we should expect to long on the dollar CAD, and let's look for a dollar CAD. We do not just go and buy, right? Even though we say that dollar CAD is likely to continue to go up, but we cannot just simply buy, because if you buy, we're going to put your stop loss, right? Now we have an ERC here. This is an ERC. The base of ERC is this candle, right? So we draw the line. We can draw from top to bottom, right? Knowing that we might not see the price come down all the way, right? Because it is so dollar is so strong and the CAD is so weak. So this could be the first level that we long. Should we see the price start to dip back here and we buy here, right? That like that. Okay. Okay, now let's go to the daily. So on the daily again, you can see that right now we are here, the ERC. Where's the base of ERC here? 50% candle. These are all 50% candle. So all is 1, 2, 3, 4, 5. All the narrow candle, right? You just take the base. So this is a level within the level, right? So this is a daily within the demand within the weekly demand. What we can do is wait for price to drop to this level and buy and go up, right? So from the current price to that level, how many pips are there? Let's take a look here. 243. My goodness. So it's not going to happen anytime soon, right? Because it's 243. Now, what's the average true range? All right, let's take a look. What's the average true range? Average true range. Okay, average true range. $97, right? So if we give it round it out, it's 100 pips. So from the current price to this level is 240 pips, right? It's not going to happen today unless there's a big news, and I don't see there's a big news this week, right? So it's going to happen, but it might happen this week. Like, who knows, right? Nobody knows. But we just bear in mind, it's unlikely to happen unless there's a big news and market just drop. Okay. So now, for swing trade, we don't have an opportunity. How about intraday trade, right? This is a daily time frame. We can see that this is the demand that we are looking at. Now we go to the H4. The same thing, ERC. That is our demand there. Okay. H1. Okay, just nothing, yeah. There's nothing, right? Just wait for price to come back, right? We do not want to chase after the market. Okay. Okay. Next one is the New Zealand dollar. New Zealand dollar. Okay, New Zealand dollar again is another commodity currency, right? Another commodity currency. And this is bad, right? You can see it's just continue to down and down and down, right? The next demand is to be here, but this is unlikely to hold because we are in a downtrend, right? CP demand in the downtrend. In the downtrend, the demand tend to be removed, right? Therefore, this is easily get removed, easily, right? You might see the price continue to go down. Okay. So we are looking to sell the same thing for the New Zealand dollar, right? This is the monthly time frame. Let's go to the weekly. Okay, we have a CP supply, right? You can see that we have a CP supply here on the weekly. Okay, so there's a CP supply there. But we don't have 1 to 2, therefore if you want to sell, go to daily. Now daily, do we have another supply, which is here, right? Oh, here, this one. 1, 2, 3, 4, 4 candle. So this I just use the same zone, yeah, about here, right here. Okay, so that is our daily supply for New Zealand dollar. Right now we have more than 1 to 2, right? So should we see the price rally up, you can sell, expect price to go down. Okay, so that's the New Zealand dollar. Very easy trade. Very easy trade should the price come back, right? The question is if the price come back. Okay, the last one is the dollar yen, right? Dollar yen. Now this cat yen, some of you who have trade cat yen, right? I short this cat yen and it's still holding a position. I believe some of you have actually short higher and now already still profitable. And I'm not sure whether still are in the trade. My trade is still there. Okay, let's dollar yen. Okay, dollar yen is here. Now, how about dollar yen? You can see that on the daily time frame, dollar yen is uptrend, right? But on the monthly uptrend, weekly, we are continuous uptrend, isn't it? Yeah, we can see that the price rally sideways and continue, right? Price drop back to this demand here and rally. Okay, so we should be looking to long on dollar yen. Right now we are in the D1. We see the price remove this trend line. This is the bull flat. Okay, a bull flat. Okay, price rally up. Okay, okay, look for long, right? But we must look for a technical level. Where is a good level to go long? We see the ERC, this one, the ERC, this one. So the base of the ERC should be this. Okay, that should be the base of the ERC. So if the price drop down here, buy. Okay, that's a dollar yen. Okay, that's all, yeah. Okay, now if those of you who, let's say, I want to go in, let's say, how about go down to H4, because what happens if the daily, the price never come back, right? And I'll miss the trade. It happens all the time, right? Trader always want to trade, right? So if you are looking for demand on the higher time frame, where's the ERC? Right, I want to see something like that. This is very obvious. Right, this is very obvious. ERC. Okay. Some people might choose this as a ERC and buy here. Some of you might do that, right? Because for me, I'm not that interested. I want to look for ERC that is very, very obvious. You can see that compare these two ERC, this ERC, and compare these two ERC. Which one is more obvious? Right? It's very obvious. The answer is this one. Right? So in trading, I would prefer to look for high odds trade rather than in the market all the time. Right? If the price drop down to this area and it rally out and I miss the trade, that's perfectly alright. I miss the trade all the time. Right? So I would rather go for high odd trade rather than in the trade most of the time. Right? So to look for supply demand is actually very, very easy. What we need to do is just look for this kind of very obvious ERC. How difficult could it be? The next, if this one fail, if the price drop down, it fail, and we doesn't have any confirmation entry because the trend line has been removed. Right? You don't have to draw, you also know the trend line has been removed. So when the price drop to this, we simply cannot put the buy limit there. We have to use a confirmation entry. Right? So this is a ERC. So when the price drop and it doesn't give us a confirmation entry we want, and continue drop, then where's the next ERC? This one. And then next is the demand here. And the next one. And then the next one. You see that? Alright? Very easy, right? So don't over confuse, don't try to think so much about looking for the supply demand. It is very, very easy. You just look for the big candle, that's all. Small, medium size candle, forget about it. If you miss a trade, that is okay. Alright? Alright, so this is the last pair. Thank you very much and enjoy your week and hopefully we'll make more picks together, right? So nowadays, I encourage people to post their trade in the forum so the chart will always remain there. If you post your chart on the Telegram, and then when the conversation, when there are people talking and chat, you see that your chart is being push forward, push back, and people cannot see your chart anymore, right? So please post your analysis on the forum, and please, when people post their setup on the forum, please give your 2 cents comments, right? At least people, if you think that you are not ready to post, that is okay. But when people put in an effort to post, at least you can do, what you can do at least is at least give some feedback. Alright? And if you don't understand, you ask questions, right? People will come back